Welcome back to Investing Talk Podcast. Today, we are really zeroing in on ATRenew. Lots to talk about with their upcoming earnings. We're aiming to sort through the different pieces of information we've gathered, make sense of what the analysts are thinking, recent stock moves, and maybe what could happen next. And hey, before we get started, if you like what we do here, please think about subscribing. Maybe leave a like or a comment. It genuinely helps us out.
Yeah.
And if you feel like it, buying us a coffee is always appreciated. Oh, and definitely drop a comment if there's another company you'd like us to look into. All right, let's get into it then. ATRenew's report. It's coming up soon, right? What are the key dates and numbers we should know?
Yeah, the timing is pretty specific. They're set to report Q2 2025 earnings on August 20th, 2025. That's before the U.S. market opens. And they've got a conference call scheduled for 8:00 a.m. Eastern Time that same day. As for what analysts expect, the consensus is looking for revenue around $4.79 billion and earnings per share, or EPS, at about 5 cents.
Okay, 5 cents EPS, $4.79 billion revenue. Those are the targets. But how does that stack up against how they've done recently, especially given some of the numbers we've seen?
Well, that's really the crux of the issue, isn't it? Because our sources, they paint a confusing picture. For Q1 2025, the company actually reported EPS of 4 cents. So they missed the consensus, which was 5 cents. But here's where it gets really strange. Revenue. One source says their last reported revenue was $641.26 million.
Okay, $641 million.
Against a consensus estimate for that quarter of $4.62 billion. So a huge miss, according to that source.
Wow, okay.
But another source we looked at indicates ATRenew reported revenue of $16.3 to $828 billion in the last quarter.
Wait, $16 billion compared to $641 million? That can't be right, can it? How is that even possible from different sources?
It's a massive discrepancy, and it doesn't stop there. Look at return on equity, ROE. One source has it at a positive 8.91%, another negative 19.06%.
Okay, this is more than just nuance. It feels like we're looking at two different companies. It really makes you question the data reliability here.
Absolutely. It's something you absolutely have to keep in mind as we go through this. These inconsistencies are, frankly, quite stark. But stepping back from those specific conflicting numbers, the broader trend for revenue growth has generally been positive, strong year-over-year momentum.
Driven by?
Mostly by the expansion of the pre-owned electronics market. That seems to be a consistent theme. Their net margin is reported at 0.73%, which is quite thin. And historically, looking at price action after earnings, it's been pretty moderate, usually moves in the plus or minus 5 to 7% range. No huge sustained gaps up or down immediately following the report.
Interesting. Moderate reactions despite sometimes missing estimates for having these data inconsistencies. Okay, let's shift to recent stock movement then. There was that notable spike in early July, wasn't there? What was behind that?
Yes, that jump on July 7th. The stock went up about 8.48% that day. A big driver seems to have been the company announcing a board-approved share buyback.
Buybacks often move the needle. How much?
Up to $50 million, set to be completed over 12 months. That news alone gave it an initial 5% boost, and it added another 3% or so in pre-market trading. So definitely a sign investors liked seeing that capital return plan.
Makes sense. Any other factors contributing to that?
Well, our sources also mentioned their sustainability efforts. Their latest ESG report apparently highlighted progress in green recycling and tech innovation. This ties into China's dual carbon goals, and it seems that message resonated positively too, a sort of feel-good factor, perhaps, alongside the buyback.
So the buyback and the ESG angle gave it a boost. What about the stock's technicals leading into earnings now? Where does it stand?
Right. Looking at the chart action before this upcoming report, the shares were recently trading around $3.98. That's significantly up from the year's low point of $2, so quite a recovery. And technically speaking, the 50-day moving average, which is at $3.27, is currently above the 200-day moving average at $2.93.
Okay, the classic golden cross pattern, or close to it.
Yeah.
Usually seen as bullish, right?
Generally, yes. It often suggests positive momentum, maybe some anticipation building, or perhaps it's just benefiting from strength in the wider sector.
But you mentioned one source called that July rally unusual. What was so unusual about it if it wasn't just standard technical buying or reaction to news?
That's a fascinating point from the sources. Unusual because it apparently didn't follow typical technical setups.
Yeah.
No classic chart patterns like a head and shoulders bottom, no clear maxi-D buy signals preceding the big jump. And despite very high trading volume, 4.4 million shares, which was up 22% from the average, there was no sign of large institutional block trades.
So not the big funds making coordinated moves, more like something else.
Exactly. It suggests the move might have been driven more by retail investors or maybe algorithmic trading reacting to momentum rather than institutions taking large fundamental positions. And adding to the unusual nature was its isolation. ATRenew jumped nearly 9%, while its peers in the sector saw much smaller gains or even declined that day.
Right, so it wasn't just the whole sector lifting off. It was very specific to ATRenew.
Precisely. Which points towards either a very company-specific catalyst we already discussed, like the buyback, or perhaps something less tangible driving it.
Okay, so if it wasn't typical signals or big money, what are the theories? What could explain that kind of isolated, high-volume spike?
Well, our sources floated two main hypotheses. The first one is maybe a touch of the meme stock phenomenon.
Ah, okay, like we saw with AMC or GameStop.
Potentially, yes.
Hmm.
ATRenew has a relatively small market cap, around $618 million at the time. Combine that with the high trading volume, it fits the profile of a stock that could be influenced by retail investor sentiment, perhaps amplified through social media chatter. The price move itself looked a bit like those sentiment-driven surges.
Interesting. What was the second hypothesis?
The second idea was a potential short squeeze.
Meaning lots of people were betting against the stock.
If there was significant short interest people borrowing shares to sell them, hoping the price drops, then a sudden burst of buying activity, even from retail, can force them to buy back shares to cover their positions. That buying pressure from short covering then pushes the price up even faster. High volume, no clear fundamental news. It fits that scenario too.
So either retail enthusiasm or forced buying from short sellers. Both suggest the rally might have been more speculative than fundamentally driven.
That seems to be the interpretation from those sources, yes. More of a speculative event, maybe fueled by sentiment or market mechanics like short covering, rather than a reflection of a sudden change in the company's core business prospects. It leaves you wondering about how sustainable that price level is.
Definitely something to keep in mind. Okay, looking forward to the actual earnings report now. What are the absolute key metrics you'll be watching? And what about the bigger picture, the sector trends?
For me, the number one metric has to be user growth. Specifically, active users on their platform and the volume of transactions they're facilitating. That's really your leading indicator for where future revenue and hopefully profits might come from. It shows if the core platform is actually gaining traction.
Right, usage metrics. What about the external environment?
Well, there are definitely some headwinds. We still hear about weak consumer spending in China and general macroeconomic pressures affecting retail. Those are risks. But on the flip side, the demand for affordable tech isn't going away. And the whole circular economy trend, reusing and recycling electronics, that's a potential tailwind for a company like ATRenew. Supply chain issues also seem to be less of a problem than they were.
And what are the analysts saying overall? You mentioned consensus estimates earlier.
The overall sentiment seems pretty cautious. The consensus rating from analysts covering the stock is currently a hold, and the Zacks rank, which measures earnings estimate revisions, is also #3hold. That suggests analysts aren't seeing strong reasons to significantly upgrade their forecasts right now. Limited momentum there.
Okay, so a mixed bag. Potential growth in the core market, but macro concerns and cautious analysts. Given all that, what are the bull and bear cases for this earnings report? What would each scenario look like?
Okay, for the bullish case, you'd want to see a clear beat on both the top and bottom lines. So revenue coming in comfortably above that $4.79 billion estimate and EPS beating the 5 cents mark. Just as important would be positive forward guidance. Management signaling acceleration in user growth, maybe signs of improving margins, that would be key. And maybe some unexpected good news, like better cost control than anticipated or finding stronger tailwinds in their specific market segment.
And the downside, the bearish scenario.
A miss, obviously. Either EPS coming in under 5 cents or revenue falling short, say, by more than 5% of the estimate. That would likely be viewed negatively. Weak guidance would be a major red flag, too. Any indication that user adoption is slowing, that margins are getting squeezed further, perhaps due to competition, or if any new regulatory hurdles pop up. Essentially anything that punctures the optimism built up by that recent rally, or confirms the cautious analyst stance.
So putting it all together, the conflicting data, the unusual rally, the cautious outlook, what's the overall feeling heading into this report? And what should listeners maybe think about strategy-wise?
Honestly, the overall leaning feels pretty neutral, maybe slightly cautious. You have the positive signals like the valuation recovery off the lows and the support from the circular economy trend. But that's balanced against the messy earnings history, those data discrepancies we talked about, and the lack of strong analyst conviction. Most are just saying hold. Our sources actually put a confidence score of only 5 out of 10 on the likelihood of a large upside surprise. So expectations seem pretty tempered.
So for investors, this sounds like a tricky one to navigate right before the numbers come out.
It does. For someone who's more risk averse, the suggestion seems to be maybe sit this one out. Don't hold common stock through the earnings release. It might be smarter to wait, see the actual results, hear the guidance, and then decide. Let the dust settle.
For those with a higher risk tolerance.
Well, given the options market seems to be pricing in a move of around 7 to 10% either way, some might consider option strategies. An at-the-money straddle or strangle, for instance. That's a way to bet on volatility itself profiting if the stock makes a big move up or down, bigger than what the options market expects. It offers some downside protection compared to just holding shares, especially given the history of fairly muted reactions and the lack of recent analyst upgrades.
And for the long-term fundamental investor.
For them, maybe the best approach is to watch closely. If the earnings report and, crucially, the guidance come out strong, particularly on user growth and margins, then perhaps scaling into a position after the report could make sense. It really comes back to that idea of focusing on what the company is actually doing and achieving, letting the results speak for themselves before committing capital based on hope or speculation.
That makes sense. ATRenew definitely presents a complex picture. It seems like a mix of genuine potential in a growing market, strategic moves like the buyback, but also clouded by data issues and maybe some speculative froth. The big question for you, the listener, to ponder might be, is that recent rally the start of something sustainable, reflecting real business improvement? Or was it just a temporary blip driven by market noise? The next few quarters should give us a much clearer answer. That's our analysis of ATRenew for today. Thanks so much for tuning into Investing Talk Podcast. We'll be back soon with more market insights.